Welcome to Wall Street Confidential. We know you've been scratching your heads over Procter & Gamble's latest guidance. Now here is a recession-proof stock, we always think,
right.
A consumer staple stock lowering its guidance. What's really going on here, Jim? Is this indicative of a larger story?
Well, because Colgate reported such a good number, you have to start questioning the execution of Procter. Now that's a new thing. That's one of the reasons why the stock's down so much is we have always presumed that Procter's best of breed. There are a lot of things about this quarter I didn't like. It felt more like Kimberly-Clark than it did Colgate, which is new. Procter is a very well-run company, but they clearly, if I had to quantify it, I would say that they got beat across the board in terms of costs and sales. So in other words, they raised price. Looks like that was a mistake. Mm-hmm. Sales dropped. And the next thing you know, raw costs went up. So their margins were crimped. Now, so why would you ever own this stock? Well, there's two reasons. One is that the margins will not be crimped year over year because a lot of the raw cost was petroleum. People didn't realize how much it is. And second is that you've got to give some credit to management here. Procter, every time it has slipped up, has adjusted and fixed things. They haven't been able to fix them in one quarter, but they could fix them in 2 or 3. We've held on to a little bit position of Procter. I want to stay up on it. Unilever's down off big off of this. General Mills off big. My friend Doug Cass is saying this is the beginning of the end of this group. I have a hard problem with that because Colgate was fabulous and it went up big. The group itself has performed miraculously in a very bad market. Mm-hmm. I think that you buy this group when you're in a recession or you're going to stay deep in recession and that you have to just say, well, you know, Procter screwed up, but that they can get better and the raw costs are going to go down. So that's why you keep some, but you don't make a big bet on Procter. It could go lower still.
Still, all right.
I think go to 53.
Okay.
But at 53, I have talked about it with Stephanie Link, who's my colleague at Action Alerts. At 53, I want to buy it. I mean, I sold it at 63. If it's at 53, I want to buy it. It's too good a company.
I like that specific.
Long term.
Long term.
Now typically, just so you know, I don't default to long term because a lot of times, if there's a company that's screwed up, it stays screwed up. Procter's history is the opposite. If there's something that went wrong, they adjust.
Yeah.
Give them the credit.
Okay. Thanks very much, Jim Cramer. This is Wall Street Confidential. Stay tuned.